Thank you, Mr. Chairman. I've been advocating for the reinstatement of the Uptick rule for the better part of 3 years. And for the better part of 3 years, critics of the Uptick rule have argued that reinstating the price test that had been in place for over 70 years would have had little or no practical impact on protecting our exchanges and America's investors from nonsensical, irrational, and arbitrary runs. Then the Dow lost 1,000 points in a matter of minutes last Thursday, despite the New York Stock Exchange's circuit breaker protections, and apparently as a result of a well-intentioned SEC regulation meant to encourage more faster trading that mandates electronic trades bypass exchanges that cannot guarantee investors the best price for a particular stock. In other words, the SEC's regulation NMS overrode the New York Stock Exchange's protection mechanisms and exacerbated a nonsensical, irrational, and arbitrary run last Thursday, a run that briefly wiped out $1 trillion, a run that the Uptick rule would have prevented. I hate to say I told you so, so I won't. Instead, I'll say what I've been saying for years. I'll say that the Uptick rule would have prevented the Dow's 1,000-point plunge last Thursday. I'll say that investor confidence is of paramount importance to our markets and to the ability of our economy to recover from the deepest recession since the Great Depression. And I'll say instead that in the wake of last Thursday's events, if our regulators don't reinstitute some type of meaningful, permanent, across-the-board price test similar to the Uptick rule very soon, investors will have very little confidence in our markets and in our regulators. And I can't say that I blame them. I yield back the balance of my time.